Hello, good morning. Thank you everyone for joining us on our latest episode of True Potential's Morning Markets. In today's episode, we'd like to cover the recent GDP figures out of Japan. Yesterday, we received the latest revision to Japanese Q1 GDP growth. What is pleasing for us to see as investors is that the revision was upwards. So that data posted at 0.7 for that quarter. Now, if we annualize that out, assume we get that same growth over the next 4 quarters, that would produce an entire year's growth of 2.7% for Japan. Now, this was above last month's reading or last quarter's reading of growth, but also ahead of market expectations or consensus. So the market had been expecting a figure of about 1.6%. Running through the report and looking at those elements that have been revised upwards, we saw from one part CapEx or capital expenditure from companies rising, so companies actually being more optimistic around the future and willing to spend on their future. And we've also seen inventories build. Now, inventories could be read one of 2 ways. The more negative way is to think that demand is slowing faster than what production is, hence companies build supply. Or the positive element to think about is those COVID supply chains that we've spoke about before actually repairing and recovering, and we're actually seeing those products flow through to companies and they're getting ready for that expected demand to come through. Now, why is Japan actually of greater interest to investors at the moment? Well, if we think about stock market performance and equity market performance regionally so far this year, Japan is actually the best performer. So to put some numbers around it and to provide some context, Japanese equities are around 7% higher than the next best performing regional index, which is the US S&P 500. So to put numbers on it, that is 18% for Japanese equities. What is also grabbing investors' attentions around Japan is the relative valuations between Japan and other regions. So Japan trades at a lower discount, so it's less expensive than other regions. So Japanese equities are about 30% cheaper than their US equivalents. Hence why we're seeing a lot of investor flow into Japanese equities at the moment. Please join us later on today for our latest podcast. We'll have our panel as the in-house financial advisors here at True Potential.